What is going on, traders? Welcome back to the Traveling Trader. Happy Monday to you. It's been a while, about a week or a little bit more, maybe, since I've done a video. So I wanted to go over, obviously, Bitcoin, where I think it's going in the short term, whether we are in the clear and you can justify a buy here, or maybe, adding to your position if you already have one. And then I wanted to talk about Tesla, which is insane. We're up 130% on Tesla since I sent out the alert in our private trading group. If you want access to the stock, crypto, and options trade alerts, link is in the description. And so, I mean, Tesla is just, it's insane. I had a $600 price target for it initially, and we're now at $768, which is unreal. I'll talk about that in a minute, obviously where, it appears to be overextended, but you can't fight momentum. I always say that momentum is the number one most unpredictable event in any market. You cannot fight momentum, just as people didn't think that Bitcoin would hit 20,000 at one point. And, Tesla, they keep shorting it. I think short sellers have lost over $10 billion in a 6-7 month period. So I'll go over that, and then I'll go over the market in general and what the short-term outlook is. Well, short to mid-term outlook is, especially with respect to the coronavirus, how that may affect the market. There are a few notable billionaires and investors that have come out today talking about the fact that the coronavirus can actually be the catalyst for the next recession. If not a recession, at least a market correction or a halting of the bull rally that we've had thus far, which makes sense, but there is sort of a chain of events that's required for that to happen. But it certainly is possible. Right now, the markets look like they definitely want to ignore the coronavirus news. However, it could get to a point where it's unignorable, right? Where you can't simply turn your back to it. But yeah, I mean, the markets look like they're recovering nicely today after a drop the last couple of days last week. So let us go over Bitcoin real quick, and then I'll go over the traditional market. So looking at Bitcoin, it definitely looks bullish to me here. There are a number of reasons for that. Obviously, it definitely respected this descending channel that we've been talking about for months now. This descending channel that started really in June, making lower highs and lower lows. It respected the hell out of all the levels, the support and resistance levels. It was one of the easiest channels with which to swing trade within, right? Buying at support, selling at resistance, yada, yada. And once we popped above that, it really signaled the next potential rally, as Bitcoin did pop above 9K the minute that we got over that. So, it's definitely a valid pattern, one of the more valid patterns that we've had on Bitcoin ever. And looking at the moving averages, I mean, you see the 50 about to cross the 100, the 21 EMA on my chart is the white, about to cross above the 200 MA. So there are bullish patterns or bullish indicators all around. If you look at the 12-hour, we already did get the golden cross between the 50 and the 200, the 100 and the 200 about to cross. So what is in store for Bitcoin in the short term? Well, after a good amount of volume, if you notice, the VFI now is back over zero. We haven't been over zero since we saw the last bull rally, which happened when we dropped down to 3,200 at the end of 2018, and then finally rallied to 14,000. That was the last time that the VFI popped up over zero in an ascending fashion, and we're seeing that now here. So the volume has definitely been above average and has been impressive, especially with regards to what Bitcoin was doing with volume after the bull rally to 14K. The volume was just, nothing to write home about. It was complete. It was complete shit, really. You see the VFI just dwindled to below zero levels from when Bitcoin was at 14K and went all the way down to about 6,400. So in the short term, what is most likely the scenario is that Bitcoin will continue to retest the 21 EMA, this white line here. Bitcoin will continue to test and retest this as it gradually moves up, right? Kind of similar to what we did back here when we popped above 3,200, where Bitcoin, climbs above the 21 EMA, retests it, does another climb, retests it, does another climb. That is very common in not just Bitcoin, but a number of assets and a number of markets. So, that's very plausible. And I would venture to say that, for those that are okay with taking on a little more risk, you can certainly play the leveraged longs from the 21 EMA. And again, I will be sending those out in the trade alerts, so sign up to that. Link is in the description. But yeah, it's a very safe play, a pretty low risk, high reward strategy to keep leveraged longing from the 21 EMA, obviously until that trend expires. It is my view that we'll get to 10,000 and maybe over before the halving, and then see the typical drop after the halving event, right? You definitely see a drop right before, right after the halving, as a result of the last two halvings. And I think people are expecting that. So I think that the market, the herd mentality, will behave as the herd expects it to behave, right? It's almost like a self-fulfilling prophecy, sort of. So that is what I think will be going on with Bitcoin. And then obviously after the halving, I think we'll gradually continue to increase and eventually bust through to new highs. I'll go over another one of our trade alerts on a coin that just astonished me, because it's a coin that I never really heard of. I mean, I heard when it dropped on Coinbase. I have no idea what it is or what it does. But OXT, not to be confused with 0x or ZRX, but OXT is Orchid. And the reason that I sent out a trade alert for Orchid was because it, again, was a low risk, high reward strategy. As you see here, when it first ICO'd or popped up on Coinbase, it found support at this arbitrary level at around 22 cents, obviously rallied all the way to about 75 cents, and then just crashed ever since. And if you look at this level here, it looked like it was finding support here again. So when I looked at it, I think it was on Friday night, and I saw that it was finding support at this exact level, and it popped above the 21 EMA. That's where we bought in at around 24 cents, and we made 53% on this trade, right? And again, there aren't really many technicals you can look at here besides the fact that it was at the same support level, and I saw that it was oversold. It definitely was worth taking a chance with a stop limit. You have really nothing to you have very little to lose and a lot to gain. So if you know how to set your stop limits, and you know how to read support levels, or at least recognize them when someone points them out to you, I mean, it's a no-brainer here. So that's why I sent out the alert for Orchid or OXT once it bounced off of the support level and came up on the 21 EMA, and it gained 53% before retracing about 30%, and it is now finding support at the 50 EMA. We're definitely looking to get back into this just for the massive potential short-term gains. Again, I will send those levels out in the trade alerts. Looking at Tesla, we are at $770. That is insane. So we've gained 130% just on the stock alone. This is not even counting the option plays or the options that we continue to play on Tesla. This is just on buying and holding the stock, up 130%. Obviously, we're dealing with hysterical momentum here. There isn't any technical analysis that you can do here, and that's evident in the different analysts' calls on Tesla. You have a lot of traders shorting Tesla, a lot of hedge funds shorting Tesla, right? Like playing with people's money, shorting Tesla, and then you have people making calls of $5,000 or $7,000 for Tesla stock. I mean, it's really the Wild West out there, and that is because momentum cannot be predicted. I always say that. So for those that are trying to short Tesla, shorting into momentum is one of the single stupidest things you can do in the market. It's an unknown. Now, if there was an identifiable resistance level, right? So say when Tesla was at 380. As a matter of fact, that was the initial trade alert when I sent it out, that, hey, we're coming up on this extremely strong resistance level here that's been in play for, over almost 3 years now, right? 2.5 years. That you see here when Tesla hits this marker at around 380, 390, this roadblock, it finds a comfort in the retracement, right? So it hit it so many times, 1, 2, 3, 4, 5, and then 6 times before it busted through. But if you shorted at resistance, I don't begrudge you for doing that. But once Tesla is 400, 500, 600 bucks, trying to short just randomly is I don't know, man. It's like trying to, throw a rock in the air and hoping that you hit a bird or something. I mean, I would never do it. I don't understand why people continue to do it. There will still be people here that are going to short at 775, just as there was people that were shorting at 600 and 500. I mean, it's arbitrary and there's no reason to do it, right? After you have established resistance levels, you do it fine. But just shorting into nothingness doesn't make sense. Another stock that I'm looking at that we've traded successfully is NIO. NIO, we made over 50% in just a matter of a few days. This is the Chinese Tesla, right? You see the golden cross happening on NIO. I'll definitely be sending out an alert for NIO on what entry levels and what exits I'm looking at. And then obviously there's my entire stock and crypto portfolio that looks just like this, and I send that out every Monday to the trading group. So sign up if you want access to that. You are also automatically entered into a 0.03 Bitcoin drawing that I do on the first of every month, and I just did one a couple of days ago. Lastly, I'll talk about the market and the coronavirus. Obviously, I was saying that the market rebounded nicely today, up 0.5% on the Dow, almost 0.9% on the S&P, and then 1.3% on NASDAQ. However, you see that there are a few investors, notables, billionaires, etc., talking about how the coronavirus could shake the markets. And this guy's name is Mohammed El-Erian. He is a consultant to Allianz, which is a large financial firm out of Europe, specifically out of Germany. But he's saying that the coronavirus, here's how the coronavirus could affect the markets. China is obviously the world's second largest economy after the US, and it will have reverberations obviously throughout the world, but more specifically for Europe. So the European Central Bank, as he states, is largely out of monetary policy ammunition to fight a downturn, meaning the central bank in Europe is so overextended in what they've done. I mean, there's even some countries in Europe that have negative interest rates. So the European Central Bank doesn't have any more tricks up its sleeve, right? There aren't any more options that they can default to if Europe's economy starts weakening, and they're going to have to fall victim to something like a correction or even worse, a recession. And if that happens, then obviously that will have reverberations in the US markets, and this will then be deemed a game changer, as billionaire David Tepper, this guy owns the Carolina Panthers of the NFL, but he's also a billionaire hedge fund manager. And he's saying that it would be a game changer. So he was actually bullish on the market up until the coronavirus, and sharing similar sentiments to Mr. El-Erian here. He can easily see a situation where the coronavirus basically snowballs into an event where, those who were so used to buying the dips in the market will now have a major perspective change and will not be as enthusiastic to buy the dips, which would then further cause prices to dwindle and then could fall to a correction or a recession. And if you notice, before the coronavirus, there was a lot of talk of a potential recession just because of how overextended the market seemed, right? It seemed like we were just getting to ridiculously hysterical levels in the market that we've never seen before. And everyone's kind of waiting on eggshells for that next event that would potentially take the market down in the short term. And this could be that event. Now, in my view, I don't know that we'll get to recession levels. Definitely a correction is possible and is actually due, right? We never see markets extend themselves this long or this severely for this long without there at least being some sort of correction to even things out. A recession is obviously a lot worse. And, in 2008, we had the housing market or the mortgage crisis. In this case, we could see a correction, and it seems funny to talk about now, right? It seems like forever ago, but we actually did have a correction at the end of 2018. If you take a look at the markets, if you look at, let's look at the S&P. You'll see that we actually did have a correction in 2018 when the S&P dipped, and all the other indices, of course, but the S&P dipped to something like 2350, and you see that valley here before resuming its path upward. So I can definitely see a correction happen as a result of this. I have my stop limits in place, and all the profits that we made in 2019, I'm looking to protect, right? I'm not just going to stubbornly hold these and burn through all the profits that we made. There are certain stocks that you can hold and that I think are safe to hold and even add to your position through things like corrections and recessions. Mainly blue chip stocks, right? Stocks that have been around for a long time, companies that have solid fundamentals, solid balance sheets, have turned a profit, paid dividends. So, you know, your Apples, your Microsofts, your Boeings, your Nikes, your Fords, etc. You know, those kinds of stocks that I don't mind holding and even adding through a recession. But a lot of the stocks that we made swing trades on, even something like Tesla, I'd be wanting to take profits. I mean, we made 130% in like a month and a half. You know, I definitely don't want to lose out on those gains just to stubbornly hold. Anyway, that is it for this video. Again, if you want access to the trade alerts, link is in the description. We do stocks, options, crypto, etc. You're also automatically entered to the 0.03 Bitcoin drawing that I do at the beginning of every month, just as a way to say thank you and give back to you guys. And you will also get access to the voice chats that I hold with the group. We talk about strategy, trades, entries, exits, TA, chart analysis, etc. Those happen spontaneously and after the live streams as well. So sign up. It'll cost you as much as a cup of coffee a week. In my view, a hell of a lot of value for a very small investment. Leave a thumbs up if you got anything out of this video. Leave a question, comment, agreement, disagreement in the comment section below. Subscribe to the channel. Hit that notification bell. Stay safe out there. Peace.